Well, applauding Dow 25K. How can you do otherwise? President Trump tweeting, quote, Dow just crashes through 25,000. Congrats. Big cuts in our unnecessary regulations continuing. Here now is Todd Horwitz, host of the Bubba Show, and Dan Mitchell, co-founder of the Center for Freedom and Prosperity, who's written a lot about deregulation, how that might even be more important than some of the tax cuts we got. But, Todd, I'm going to start with you because you're a little reluctant about stock markets right now. I hope you're not fighting this tape, are you?
No, David, and Happy New Year. I'm long the market. I'm always long in my investing account and in my retirement, so I'm not getting out. I just think we're probably a little bit frothy here, but congratulations. The Dow's 25,000. I wish they had the confetti falling over my head right now, but look, it's great. Regulations are great. They're cutting things down, but we all know that the markets are going to find a place and a reason to sell off at some point. There's still a lot of ugly things underneath the surface of this market
what, for example?
Will one day come to play. Like the massive amount of debt that we have. We've got more debt today than we had in 2008. Like the auto and student loans. We've got a lot of problems here that we're ignoring. And now consumers confident, but they're now spending more than they make again, which is another problem because we don't have job growth through earnings. We don't have wage growth yet.
Well, we were beginning to see wage growth, and we're beginning to certainly see job growth. Dan, let's talk about deregulation, because tax cuts are wonderful. I like it when taxes go down. On the other hand, the market started going up long before we had the tax cut law in there. It was deregulation, 22 cuts in deregulation for every one addition in regulation. I mean, that's extraordinary, is it not?
There's no question that businesses are looking at the environment in Washington, and they feel they have breathing room. They feel that they're not getting hit with one new big regulation after another, which was happening all during not just the Obama years, but even the Bush years. So there's a change in mentality in Washington. It's not so much that we've had deregulation. There's been a little, but the main thing, I think, is just the fact that they're not getting hit over and over again. You combine that with the fact that we had the big corporate tax rate reduction, and I think, yes, there's a better business environment. Now, I don't disagree that there could be a bubble. Markets, when they go up, sooner or later, there's a correction. But I think some of these fundamentals in the economy are getting better because policy in Washington isn't as bad anymore.
But you know what kills it? Getting back to taxes for a second, Paul Krugman has embarrassed himself once again. Not only did he make the worst prediction about stock market ever on the night of the election, saying it was going to go down and never recover, but now he says that there's no relationship at all between tax cuts and incentives for companies to invest, to which you say what, Dan?
I think he must be smoking something really fun. Maybe he had a big New Year's Eve bender, and it hasn't ended yet. Look, let's be honest about it. Look at places like Hong Kong and Singapore and how fast they grow, not just year after year, but decade after decade, and compare that to the economic stagnation of a place like France or Italy. Now, obviously, taxes aren't the only thing that matter.
Sure.
You have regulation, monetary policy, trade, you name it. But if you're a business and you're investing, if you're an investor and you're looking where to put your money, of course you're looking at after-tax rates of return. Taxes matter a lot.
Todd, don't you think 2018 we are going to see a big increase in investment because of the new tax law?
I think there'll be more investment. Yeah, I agree with you that there's going to be more money, but what we really need to see, David, is we need to see not only the money going to bonuses and going into buybacks of stocks, but we really need to see some CapEx spending within this country and to see some growth so we can create some real jobs. But the real thing we need is a little bit of higher interest rates so that we can actually let the small business guy borrow money because they pay the best wages and they are the true growth of America is small business, which we've really cut out.
All right. Well, we do hear from a lot of CEOs saying they're going to increase capital expenditures a lot. So we'll see if they follow through on that. Todd and Dan, thank you very much. Appreciate it.
Thank you.